Hello and welcome to TMC Connect. We're going to let everybody come into this session and then we'll get started. It's always that awkward elevator silence. Hi, and welcome to TMC Connect. My name is Tony Bramley, and I am on the business development team here with the Mortgage Collaborative. And we are very excited for our presentation today on solving the puzzle of e-eligibility, brought to us by our great partners over at Snapdocs. Want to let everybody know that as you filter in today, you are coming in on mute. But we want it to be engaging, and we want you guys to be able to ask your questions. So please feel free to use the chat or the Q&A function, and we will get those questions addressed as they come in. Tomorrow, as a follow-up, you will receive an email with a one-page kind of synopsis of what we covered today, as well as a link to the YouTube video to go in and rewatch at your leisure. So thank you all again so much for being here. We appreciate that you've taken the time to stop by and come back anytime to TMC Connect. And without any further delay, I am going to turn it over to Akash.
Thank you, Tony. Guys, great to have you here. Let's do a quick round of intros so you know who you're going to be hearing from. So my name is Akash Bose, and I'm the Director of Market Intelligence at Snapdocs. And what that means is my role has a little bit of a strategy element to it, and I support go-to-market strategy motions. There's a little bit of operations element to it, where my team works with prospects and customers in helping them with various consulting style engagements to build, quantify, and realize the value of Snapdocs. In my prior life, I did something very similar at a leading experience management company at Vidalia, and I was brought over to establish those functions here. So for those of you who are unfamiliar with Snapdocs, I'm going to get into a little bit more detail as to what we do, what is the value prop and the problem statement that we're addressing. And at a 50,000 foot view, we're a company that's perfecting closings. I'm joined here by Rebecca and Femi, who I've worked with very closely, and I'll let them kind of introduce themselves as well, and then we'll get started.
Thanks so much, Akash. I am a manager at Falcon Capital Advisors, and we have partnered with Snapdocs to produce the e-eligibility reports for Snapdocs and prospective lenders. So we're very excited about that partnership, and we think it's doing a great deal in helping promote adoption. Here at Falcon Capital Advisors, we have a digital mortgage practice in which I'm part of, and we're a mortgage consulting firm more broadly in the DC area, where we work to assist our lender clients in their journeys to implement eMortgages. We also support Ginnie Mae. I think, as most of you know, they launched their digital collateral program and were able to begin accepting eMortgages in 2020. And so we work to help them do that launch and the ongoing administration of that program. And prior to Falcon, I spent 3 years at Fannie Mae on their eMortgage team, where I helped to promote eMortgage adoption through education efforts and onboarding of lenders and warehouses, custodians, and servicers all onto their eMortgage program. Okay, to you, Femi.
Hi, I'm Femi IE. I'm the Vice President of Branching Operations at Revolution Mortgage. We're an independent mortgage bank based out of Columbus, Ohio. I'm a Lean Six Sigma guy that just happened to get into the mortgage business. I've got lots of underwriting experience. I've got lots of training experience, lots of production experience. Definitely the mortgage guy on this call. Definitely the mortgage guy on this call. A little bit about Revolution Mortgage. We're a growing independent mortgage bank. We're only about 3 years old now, but we have about a bazillion years of experience if you count all our executives, different prior jobs and other stops. We run at about 70 offices right now. By the end of the year, we should be right around the area of 100. So we are a growing force in the independent mortgage bank space. My role with the company is realistically just keeping all of our originators on the ball and making sure that they have the tools that they need to have a competitive advantage. And that's where partnering up with Snapdocs and Falcon came in.
Super. Thank you both, guys. I am very excited to have this conversation with you both, and what a pleasure to work with you. So let's get this started. If there's any issues with the slides, just chat. There's three major questions we want to answer today, and those are what you're seeing on the screen. One is why are we streamlining the understanding of e-eligibility? What factors are driving the eligibility adoption? And how do lenders apply it? And Femi, your talk track on the last point, when we get to that point, would be very relevant for the lenders on the call. And my goal is to approach this via dialogue. I want to learn through the process. I don't want it to be something we're reading to the audience. This needs to be very much an engaging type of forum. So please don't be question shy. We're going to be answering those questions as they come in. So please keep them coming our way. And excited to learn as we go through this. So I told you that I would be telling you a little bit more about Snapdocs, and this is particularly folks who may not be familiar with the company or may want a refresher. So at large, look, mortgages and particularly closings are complicated. And mainly that comes down to, there's a technology element to it, of course, but it's not just technology that's holding it back. There are multiple parties involved, and there's a fragmentation issue. And I can tell you that I tested that from a borrower standpoint. Before I joined the company, I went through a complicated mortgage process on my end, and it was the tail end of it. It was quite frustrating. There were delays, there were errors, and long story short, the ownership all came down to me. And it was a stressful process for an exciting moment in life. And so when I was exploring Snapdocs, that problem statement resonated with me, which is that, hey, we're solving for a fragmentation issue in the industry. And our CEO's vision is to work backwards from that ideal state, which is to perfect closings. And to us, what that means is error-free, it's fast, it's transparent and intuitive for the borrower and all the parties involved. And as a result of it, it's repeatable at scale. It sounds simple, it sounds cliche to say perfect closing, but when it's done right, there are far broader implications, and we're going to hear about that throughout the conversation today. And also, e-closing is not just about e-signing documents, right? It's far more than that. Rebecca, I know you have a talk track about that, but e-closing is more than just signing a document via DocuSign. So we'll touch on all of those. And look, I look back and I say, if my closing was a little bit more e-friendly, it would have saved me a lot of hassle. I still have this yay big, whatever stack I got from the settlement agent after my closing, and frankly, I don't know where it is. It's a pain to keep track of all the physical trail that you get. And as lenders go through their journey on digitizing their mortgages, one of the first things that's going to come to mind is, well, how much of the portfolio can you do e? And that's where this whole e-eligibility piece comes in, both from an individual closing standpoint, but also at large, how much of your portfolio, how do you go to market with this? All of that is absolutely relevant. The next natural question I would ask if I were in your shoes would be, okay, well, what's the value of doing digital closings? One, as I articulated, it's definitely a better experience for the borrower and for the lenders and any parties involved. But from a quantitative standpoint, there is also significant boost when it comes to loan margin, especially as the margins get compressed. The automation, the operational improvements allows you to maintain that buffer. And it's an industry that needs innovation, right? And it's complicated. There are, as I said, there's the physical trail of just keeping track of all the documents, not only from my side as a borrower, but also the lender side. It adds a lot of arduous process in terms of communication, the number of emails that are back and forth that are exchanged, the number of physical copies that are exchanged. If that process can be digitized, and we are building the infrastructure to get to digital closing, that is where the value comes in. So this is the vision, and as I said, we're kind of working backwards from it, and the e-eligibility portion is the first step in the process to say, how quickly can I go e, where, how, with which investor, et cetera. And that is when we partnered with Falcon to build up this assessment to help lenders evaluate exactly, how do they go to market with e-assessments. So let me pause. Let me ask Femi a question. Femi, from a lender standpoint, and you've done this, you have the most experience in mortgage of the three of us. But what I said, how is that resonating with you? Do you see that those kind of fragmentation and technology issues are lining up on your end? I'd love to have you add if I missed anything.
The fragmentation issue is just tremendous. I mean, for anybody who's ever had a post-closing file pended because they were missing a name affidavit from a closing package, it's one of these just completely inane pieces of paper that makes no difference in absolutely anything. That's going to end up costing tons of money when you get a roll fee and something isn't sold enough in time. Like the concept for moving into e-mortgages or e-eligibility, or e-mortgages in general, is tremendous from a lender standpoint. And it's more than just doing an e-closing package where people are signing digitally. It's having AI actually go through and validate that all the docs are completed quicker, or that all the docs are completed correctly, so that you can actually get funding numbers out quicker. So that you can improve the experience from all of the parties that are involved in the closing, not just the person who's going to sit there and sign 200 different pieces of paper. There's advantage in e-closings definitely in being able to fit more packages into those specific days. We've all worked at lenders where we just end up having 97 or 157 closings on the last day of the month, where we actually run into capacity issues with our different title partners. If each one's taking an hour, they can only handle so many in a day. We've got to get some extra ones going on. Using this e-process has actually brought our closings down to about 15 to 20 minutes or so for what we're targeting, so we can actually fit extra files in there throughout the day. More stuff on what's complicated or what gets simplified in these, I'll actually explain more as we get into the assessment. But the concept of the fragmentation it's real. We see it from those of us in the mortgage industry that we've been in here. We're just so used to this is just what happens. And like you said, Akash, it's a space that's ripe for innovation. And it's something that I do want to say, this is not the bleeding edge of technology. We've all gotten on with somebody who's bitten off more than they can chew and the things don't work. This is surprisingly convenient and it's comforting in that fact that I don't stress out over at night on if it's going to work or not. So that's a very welcome piece that I don't know that I've mentioned yet.
No, that's good to hear the validation from the lender's perspective. And the fragmentation issue, that's absolutely critical, and especially with all the parties that are involved. And actually, Snapdocs' origin story was to start on the settlement and the scheduling side, and we built on from there more than 10 years ago. And you can see some of these things, numbers on the screen. So just to articulate the scale of the network that we've built so far. So we have about 50,000 settlement offices in our network. Notaries, we have 150, 140, 150,000 with 240 lenders who we're working with. And on average, we're doing upwards of 250,000 closings a month. All of that kind of attests to how we're solving the fragmentation issue. And we continue to build on that foundation. So that said, Femi, I want to get into more about why you guys chose to do the assessment. What did you learn? Help us understand that process from your perspective once you engaged.
Realistically, on the assessment, I can't stress its value enough. Like, if I could do this whole process over again, I'm starting with the assessment, and I'm literally not making a single decision until I get that back. There is nothing that can be said about how much you don't know about what you don't know. When we got started at Revolution Mortgage on e-eligibility, what we wanted was this particular thing in a box. What we ended up with is something entirely different that's going to put us on a track to get to where we wanted to do. The question that we really started with is, how can we start doing some of these e-closings so that we can keep up with X, Y, and Z competitor and in this particular market? And what we didn't account for was everything that was in that assessment. The assessment comes back and it analyzes your warehouse lines on who will actually accept the IPEN or the e-sign packages. It goes through which of your investors are taking it. It will help you settle up on whether or not you're going to be signing your documents earlier or the same day of closing. It's going to get into which states and which counties that you're set up in that allow you to use e-recording or that are friendly for this. It's going to help you if you're really using the e-closing as the direction that your company's going into and you're moving into the full e-note package. It can help you drive where you want to work on your recruiting, where you want to start targeting your business so that you're growing and that you're actually growing in the right directions. The assessment really just it puts so much information of, I didn't even know I was supposed to ask that question. Like it got that part and put it in front of me. And we've got a lot of smart people where we work. We've got a lot of people with some great capabilities, but in just starting the assessment to come up and say, I don't know a single mortgage lender that has 2 people in compliance, 2 people in operations, and 1 person in closing that they can just pluck out from their setup and say, hey, please go research which states are going to accept IPEN or which states are going to accept e-notes. By the way, I need you to pull our hedge and then figure out with our hedge what exactly they take for e-eligibility and closes. I need to know which of our bond programs is acceptable for that. Like if I turned around with that and I looked at our company office staff and say, who do I give this task to? I'd be staring myself in the mirror and going, oh my God, I'm going to be more involved by the time I'm done with this. It really got rid of the daunting process of not understanding where to start. It really did. Like it reset our expectations entirely, and it provided an invaluable resource to know, okay, this is what we really want to do. This is the right way to get there.
Tony, man, you answered my next 2 questions. So thank you for taking those away from me. But I was going to ask you, have you guys tried this before and what worked, what didn't? But clearly it sounds like the assessment gave you angles that you wouldn't consider had you, unless you have that specialty in-house, right? So that's a good sign. And from a value standpoint, once you've got it, how are you guys using this? Are you using this in terms of hey, here's how we're going to go to market as we do more, as we go on the journey from wet to hybrid to e-notes to full e-close? Help me understand that a little more, or what's the vision at least?
So the vision is the crawl, walk, run.
Right.
When this got started, we said, hey, we're going. It was aim high. We're going to do this. We're going to go all the way to the top. We're going to do 100% RON closings, and that's just where we're going to go. When you get that assessment back, in our particular assessment said that 39% of our investors, actually accepted the full e-close. And I took a look at that. I'm having a discussion with our CEO, and I'm sitting here saying, this is absolutely horrible. How are we going to do this? Like, we can't sit here and come up and move all of our business to, and we've got tremendous BI tools that identify what's going on. And I took a look at, who we're actually selling to, which of these investors, what of our pool is, what are we going to lose in margin if we end up moving all these other files over to these companies just so that we can do the e-close package. When we got to it and we had the actual call about the assessment, what I learned was 39% is like a phenomenal number for a new lender. We were on the top end of the scale. So this is still on the spot where the adoption is growing. So understanding what you could really temper in your expectations, and then putting a proper deployment strategy of, okay, we need to crawl first before we start running. All right, we're not going to jump headfirst into setting up an e-vault and then moving into 100% e-closings. What we need to do is move into the hybrid space, figure out how we can get with our individual investors and how we can make our experience the best for our customers, for our referral partners, for our branches, and for our loan officers and our closers and post closers, everybody involved. How can we make the experience the best? And we started that by adopting the hybrid first. Moving into that, it allows us to get used to it, allows us to notify all our settlement agents, hey, by the way, if you guys aren't on the Snapdocs settlement platform, you need to get on there. This is the direction that we're going. We're doing 1,000+ closings a month right now. we need you guys to get on this space. And it gives us time to set up that with our individual partners. Once our partners are set up with that setup, it gets our closers and our post closers used to actually using this. I cannot wait for the value assessment that actually comes back from what we're able to actually move to funding quicker, what we no longer have to manually review. There's going to be benefits to using the e-closing platform that, I mean, you're never going to make all of your money back. You're not going to just straight cut cost out of it. There's going to be costs associated with it, but the manpower reduction or the manpower hours in order to get some simple tasks achieved are something that we're really looking forward to, like super looking forward to.
So it sounds to me that this assessment was almost a conduit for you to get over that friction hump internally, right? So you guys were using this.
We're literally not doing the e-closing package without the assessment.
There you go. There you go.
Do it.
No, that sounds good. It sounds like you guys are using that as it's a tremendous value add to Revolution, and I can imagine similar to other lenders. You know, unless its expertise is built in house, that value is some things you may not even have considered. So, what I want to do, I think we're building up the climax for what this assessment is, and I kind of want to give Rebecca an opportunity to kind of walk us through, you know, what this assessment is, how we're approaching it, how it's going to evolve, and segue into that. And this is a nice segue. But before we do that, Femi, last question from a value standpoint. Did you enjoy working with me and Rebecca and Falcon team? I'm just kidding. I'm just trying to...
You don't have to answer that.
You don't have to answer that question. But Rebecca, let's transition to you, and let me know when you want me to move the slides.
Yeah. So I think next slide.
You want to go to the next one? This
one?
There
we go. Yep. All right, so before we get into really what the e-eligibility report contains, I just want to level set on some terms that you've actually already heard Akash and Femi use today, and that you will see used prevalent in the report. And the e-eligibility report when you receive it. First one, we're talking about e-mortgage. This is a very specific term that covers a closing that involves an e-note. So there can be any and all pieces of the closing package that can be signed digitally, but e-mortgage specifically refers to a closing that has an electronic note involved. And so there's specific technical and legal requirements in producing and signing and storing that e-note. So when you heard Femi say that not all investors accept the e-note, that's why, because it's a little more technical and there are legal requirements surrounding it. So the big GSEs are accepting them and aggregators are just starting to accept it, but not all investors are accepting that e-note. But however, there are different forms of closings, electronic closings. And again, this is when Femi's talking about the crawl, walk, run approach. You want to start with the one that's most commonly accepted. And so there's a hybrid closing and then a hybrid closing where the majority of the documents are signed e-sign, and that really gives the borrower a lot of transparency up front, and it really helps the closing to be quick and efficient when the settlement agent shows up at your house. I know Akash gave his example of his paper closing. I have an opposite example where I had a majority electronic closing and an electronic and actual IPEN notarization happen for my refinance. And I think the settlement agent was at my house for 5 to 10 minutes. It was very, very fast, very efficient. It was during COVID, so we sat outside. So it was a very pleasant experience. So there are different types of e-closings. Again, you can do the crawl, walk, run, where you start with the hybrid, then you'll incorporate that e-note, and then finally get to that full remote. Keeping in mind that as you progress to that full remote, there's a little bit more technical and legal requirements that are going to need to be considered. And so a fully digital closing, when we're talking about full remote, there is going to require a form of an electronic notarization. And there are two primary forms of electronic notarizations. There's the IPEN, which stands for in-person electronic notarization, and RON, I think that's the more popular one, especially during COVID, for remote online notarization. And IPEN is really similar to a traditional notarization where both the notary and the borrower are going to show up together. However, the difference is it's going to be on an iPad or some type of tablet. It's going to be e-signed, and the notary is going to apply their seal electronically. Whereas a RON is connecting the borrower and the notary in different locations via a secure AV connection. That's really kind of the ultimate borrower experience that you hear people say, oh, you can do the closing in the comfort of your own home in your pajamas. I think that's probably where a lot of millennials and younger generation want to be, and really where the industry and the laws are progressing towards the adoption of RON. Both on IPEN and RON do have state and county considerations for acceptance, and the report gets into that. Next on here, we see the MERS registry. That's really going to be specifically in play when you're talking about the eNote. It is the system of ownership, the system of record to record the ownership and location of the eNote. So you're no longer going to have a paper note that is going to be held by a custodian, that's going to have assignments attached to it. All of that's going to be stored on the e-registry, and transfers of those ownership and location are done via the e-registry. So that's why you really need an extra technical piece, and all of that is due to the laws that that govern eNotes, which are UETA and the eSign Act. And finally, eNote, I've said it many times here, it's important just to remember that it's not a PDF copy of a signed document. It's not even a Adobe signed note because of those technical requirements. It's an XML document sitting on top of or an HTML sitting on top of an XML, which we refer to as a smart doc. There are also e-vaulting requirements around it and specific signing requirements around the eNote. So when determining and thinking about the type of closing that you can perform, there are 5 factors that are most important in that decision. And we'll dig into that. Femi has been so gracious to let us use Revolution as an example for you guys to kind of understand how we think about these factors. Akash, do you mind going to the next slide, please?
Yeah, let's do it.
Awesome. So I'll just touch briefly on this slide, but then I think really more impactful is to look at the slides with Revolution's results. So here we have counterparty requirements. Again, this is going to cover investors, warehouse lenders, any counterparties that you deal with on a daily basis. What are their requirements and their acceptance? Title underwriter restrictions. Some people don't even think about title underwriters, but they specifically are going to have restrictions around IPEN and RON and the use of those. And really, those are the 2 considerations when you're going full e or remote closing. County registrations, there's a lot of data there. There's a lot of counties when you're doing business, and as many states as Revolution is, you really want to have that data at your fingertips, and you want to think about these things. You don't want to be progressing towards an e-closing and then the last minute realize, oh, I can't record my security instrument. Similarly, you don't want to be progressing towards it and then have your settlement agent at the closing day say, no, I don't do e-closing. So that's also a consideration that we look at in the report. And finally, ENotarization regulations, which I just covered earlier. All right, can we look at the next slide, please?
Right.
Rebecca, before we move on.
Oh, sure.
Oh, go ahead, Femi.
2 seconds on this 5 factors of e-eligibility. This is what you don't know as a lender. Understanding the title underwriter restrictions, it didn't even dawn on our team while we were setting this up as to where we weren't looking at it. But we understood that the counterparty requirements mattered. The level of detail that you actually get from the county registrations and where these things are eligible is very, very helpful. This is just one of those spots that's going to help highlight to identify that the assessment can help you with what you don't know that you don't know.
Awesome.
And Rebecca, one more thing. Would you say, so if lenders were to do this on their own in-house, is what's preventing them from doing so? Is there an information gap, or are one or two of these 5 factors more difficult than others to kind of address?
So I would just say, one, Femi just said that there is an information gap, that you don't know.
Femi has been taking
Yeah.
has been taking my answers and questions preemptively.
Right. You don't always know every single angle that you need to investigate. And on top of that, on, collecting all of the different aspects, the information is changing quite frequently, to be honest. This is a very fluid space right now. The adoption is happening rapidly, and we'll talk a little bit more around e-Notarization regulations, but those are changing at the state level, especially during COVID, when there were some emergency orders in states that by governors that were allowing temporary RON or IPEN or something else called, I forgot, it was like in-person, where I can't remember the name, Akash, you remember, where you're using like a Zoom to do a notarization, but it's still like a seal that's done on the notary. Anyways, so all of those things were happening very fast, and still we're seeing, like, New York last week just passed their RON law. So these things are happening. It's and so just keeping an eye and a finger on that pulse, it can be very daunting, as Femi said. And where if you have a third party that we're actively collecting this information, and we're doing this for lenders all the time, it's just really easy for us to prepare this at a portfolio level. It's not a loan level, it is a portfolio level, and you'll see that in some of the results that we go over. And it really can give you guidance on where should I start, where would I get the most impact right out the gate, and then I can get a little bit more and dig deeper into the more technical, or the maybe the less accepted type of products at a later time.
Sounds good.
All right.
So I'll move forward to this one.
Perfect. So yeah, we're going to dig a little bit deeper using Revolution's results here. This is our counterparty requirement slide, and this is just an example of what we, when you're getting the report, it's actually a document. It tends to be around 20 pages, which that can be daunting in itself to read, but it has a lot of information in there. It's very important to have that information at your fingertips, but you also would get a presentation that would have a slide just summarizing it at a higher level. And so here we see the analysis of the counterparties. And of course, this has been scrubbed a little bit, but what we see here is, again, we're thinking about counterparties, any counterparty that would need to have an acceptance policy for e-signatures, e-notes, or RON or IPEN. We're going to investigate those counterparties for you, and we're going to come back with some numbers for you. And here we see that out of all of the 8 of the top 17 investors, there were 39% of the loan volume, of Revolution's loan volume, where they accepted e-notes. And so Femi had said this earlier that, oh, that seemed kind of low to him, but that actually is high, given the state of where aggregators are today. But again, there is adoption that's going on right now. So if we were to take another look at this in like a year or two, I think that number would be greatly improved. On top of that, we'll see that similarly across the board for IPEN and RON. So again, those are the 2 forms of electronic notarizations. They remained around 38 to 39% of the loan volume. So that really could drive where you would be doing your closings, especially if you want to do a pilot approach to something like this. You would want to start to pilot in the areas and with your investors that you would have no issue selling those loans to. All right, next slide, please. And of course, if there's questions coming up, Akash or Femi, because I can't monitor it right now, just let me know.
That. Sounds good. Yeah, so this is a good segue or a little stopping point. Folks on the call, if you have questions, please engage. We want to address them as they're coming in, so let's keep this conversational.
Awesome. So e-notarization regulations, they are determined at the state level. And so those are the laws that each state have to govern the use of IPEN and RON. The ability to record an e-notarization, so if you have an e-notarized document and you're going to record it, that is actually determined at the county and jurisdictional level. So the report, what it does is it will take a look at those two aspects, and it also includes a third kind of aspect, which is whether or not a state would allow for a paper out recording. And a paper route recording is where an e-notarized document would be printed out and recorded similar to a paper recorded document at the county office. So it takes those three aspects and we assign a grade to it. And that grade is really indicating the potential to do a full e-closing. And so we can look at this slide and see where Revolution fell here, which it was pretty good. We saw that 20 of the states were flagged, states where originations were happening were flagged with a high potential for full e-closing. 13 were identified as a medium and 17 as a low. And I'll talk a little bit more on the next slide about what that mean, what those rankings mean. We also see that 5 of the states that are representing over half of the origination volume had 100%. 5 of those, 100% of them were flagged as high. So that's really good because that's over 50% of volume. And the report will also take a look at your top 10 counties where you're originating and give you the data on whether or not those counties are allowing e-recordings and produce or have the ability to record an e-notarized document. And here we see that 100% of Revolution's top 10 counties have the ability to perform an e-recording. All right.
So Rebecca,
yeah.
Let me double click on that because I think that's always throws me off. You mentioned 3 factors: the e-recording, e-notarization, and I believe the paper out recording as well. Maybe that's a sub part of the other 2. How do these interact with one another? Should we approach it with a lens of one supersedes the other?
Sure, yes. So they interact in the way that the actual ability to perform the notarization, the electronic notarization, is governed by the law. So if if the state has that ability, but the county does not have the ability to take that e-recorded document and record it, obviously you're going to want to pay attention to your county or jurisdictional regulation there, or what their abilities are, because you need to have a recorded security instrument. So I wouldn't necessarily use the word supersede, but I would definitely say it's important to drill down at the county level, because you don't want to do something that in the end is going to leave you with an unsecuritized note.
So got it. So what you're saying is if the state allows it, but the county doesn't, you could have a potential, that could limit your ability to e-close. But
that's correct.
Is first, okay. And what about the reverse situation? What if the county allows it, but the state doesn't?
So there are states, okay, there's a couple of things to consider here. There are states that will allow you to use an out-of-state notary in order to perform a notarization. So in that case, you would see that that state does not have a law prohibiting remote online notarization, but they don't have laws that are allowing for remote online notarization in their state. In that case, what we've seen is that the closing agents would engage with an out-of-state notary in a state like Virginia or Texas, who has lots of raw notaries that are doing those. And so they could perform that. But again, you still want to think about your county level. In your example, you said your county can do an e-recording. So that would be great. You could engage with that out of state, and you could do, so it's not necessarily limiting if the state does not allow for remote online notarization. And so the other thing to keep in mind here is a paper route recording. So if the county allows for paper routes, and going back to my example, where the state has passed Ron, then, and the county says, no, we're not going to e-record that for you. No problem, because at the state level, the state has said, hey, we do allow for paper out recordings. And so you would just paper that out and have it recorded just the same.
We have a question that came in through chat.
Oh.
It's from Mercedes. It says, what assumptions do you see lenders make that get in the way of adoption of digital closings? Akash, do you want to answer that from Snapdocs perspective, or do you want me to describe or at least our biggest failings?
I think it would be, why don't you share that and I'll chime in with the with your lender's perspective. I think it would be value add.
Sure. The assumption that we made that this assessment just recapitalized, or that just completely changed our opinion of what we wanted to do, was the amount of investors that would actually accept the e-notes. We were really sitting there thinking that it was going to be in the high 90s and that we may have an issue with like the Idaho bond program or something like that. Like we were sitting there thinking that it was going to be like these one or two off lenders that weren't going to accept it. It didn't even dawn on us that there needed to be a different law in the state regarding IPEN versus RON closing versus this versus that, prior to even converting it to an e-note to be able to ship the setup in there. That was the biggest mistake that was the biggest assumption that we made that was corrected by this assessment.
I think the other aspect here, and we haven't gotten into it, would be, the settlement adoption. How much of from what I've heard is, oftentimes lenders don't consider that fact as to how many of their settlement agents are already doing e-closings or already are familiar with the process. And through this report, through the ones that I've been involved in, when they see, okay, well, we have 13 settlement companies we work with, 12 of them are already familiar with the Snapdocs platform, or they know e-closing, that is okay. That I don't have to go with the hand-holding process of getting them onboarded into this. So that's something of an aha moment that I've seen. In addition to what you said, Femi. Rebecca, I don't know if you have any other points to add to this.
Yeah, I second settlement readiness. That's definitely something that I've heard is a common barrier, firstly, but second, when we have done these reports, I myself have been shocked at, and I was going to talk about this a little on the next slide, about the numbers that come back from Snapdocs of settlement agents associated with these lenders that have already used their platform.
Oh, sure. Great. Let's keep that in the background as you're talking about it. And tell me if this is the right one. I feel like
we don't really
one of the slides switched order.
No, this is fine. We'll talk about, because I promised to go over with the high, medium, low, what that meant, and then we don't have a slide covering the last two, title and settlement. I'm just going to talk about it here. So for high, and you'll see the graphic on the right-hand side here. This is part, again, of Revolution's results. High means that at the state level, they have enacted a law to permit RON or IPEN, and that the state has a paper route recording law. So what that means is that that you can either e-record or paper route record in every single county in that state, and that at the state level, there is a RON and IPEN law. So you really would not get into a situation where you would need to have second thoughts about doing a e-recording there, unless you're thinking about at the investor level. We're just talking about state here. So medium, it's going to include those states that do have those laws in place. So again, state level IPEN and RON. But they don't have a statewide paper out recording law. In addition to that, however, I would say they have a 60% or greater of the counties in that state can handle and support an e-recording. And basically low is every other scenario. It's important to note that these regulations are really just for the securitization, the notarization of the security instrument. and really have no bearing on the eNote because the eNote's not notarized or recorded. So eNotes can be done in all 50 states. There's no issue with eNotes there. And finally, I just want to cover the last two eligibility criteria that we don't see on this slide. One is title underwriter restrictions. So commonly, you're going to see title companies have their own requirements around the use of RON and IPEN, and I alluded to this earlier. And they're going to have similar requirements in the same aspects as the investors do. There's going to be states that they'll permit it done in and states that they won't. Some of them are going to have their own technology requirements, and they're going to have approved vendors versus not approved vendors. Some will have process limitations. I mentioned using an out-of-state notary. Not all title companies will allow for the use of an out-of-state notary. So it's very important to understand your title underwriter restrictions, and this report covers that as well. And finally, settlement readiness. It's last, but it's definitely not least. It's very important that your settlement agents are engaged in your rollout for electronic closings. They need to be familiar with the platform. You don't want them to be the barrier to adoption. You don't want to have invested in this technology and then have it stop at settlement. So as you were saying, Akash, Snapdocs is maintaining data on the settlement agents that have used their platform. And in the report, we will return those results based on a query of the lender settlement companies. And also the report will have other tips for engaging with settlement for that transition to E.
Rebecca, I want to ask you a question you mentioned earlier. You mentioned that a lot of it, one of the things holding lenders back is the information is dynamic. It's changing. With COVID, a lot of things changed. Do you foresee this map? And I was kind of, taking a look at it from a gamification perspective. Do you think this is going to be all green in the next 2 years, just because other states want to catch up and compete? Or how do you see that play out over the next year, 2 years, 3 years?
Right. So I wouldn't say it's going to be all green, but especially California, if people are lending in California, they're going to know what a stickler California can be when it's coming to RON. In fact, they have something in front of their legislator currently that's called the Notary Protection Law. So it's very interesting, yeah, that's the name of it, but it does have a RON element to it. So there is a federal law that's been hanging out there for a while. It was reintroduced in 2020 to standardize notarization at the federal level. So if that gets passed, then yes, it would all go green. In the absence of that getting passed, you are going to see kind of like a patchwork where these states that are either silent on RON, and so again, you would want to investigate if you could use an out-of-state notary there, or strictly prohibit it. And that's kind of like where California is hanging out. So you will see more and more adoption. Again, New York is just changing. And I think there will be more green on here in 2 years, but I don't think it will be all green. And one other thing I want to say about this is that is the consideration about having a law that prohibits RON versus being silent on RON was what caused the GSEs in 2020 to expand the list of states in which they would accept a mortgage that has been remotely notarized and those states. So their list, if you look at their selling guides, is going to be greater than what you see green on this map here. And again, that's because they felt like they could take the risk of including the states that were kind of silent on RON.
Got it. I see the chat popping up. There's 6 things going on. I haven't clicked through it. Tony, Femi, do you see any questions there?
No, Mercedes' question was the last one. The rest have been Tony.
Got it.
I just dropped an additional question for Femi, and then
there actually is one in there. It says, we've been discussing the Revolution Mortgage results. Femi, how did you prioritize what you would focus on based on your report results? Realistically, that's where we did a wholesale change of what our expectation was, and where we went from saying, hey, we want to go and we want to be a market leader and be pushing for all RON stuff to this crawl, walk, run setup. And when I say crawl, walk, run, I'm effectively saying I want to start with the hybrid setups. I want to start with the electronic bulk docs in your closing package, and then the in-person notarization, so that we're still delivering a wet sign notarization package, and we're just kind of dipping our toe into the e-mortgage access. The next piece that we're going to walk into is developing our e-vault and actually moving towards e-notes. And then we're going to look at the full RON package in the future. And that was really based on how many of our different investors wouldn't accept something at a specific time. Because it's not like we want to say, okay, we want to just ditch the price from all the aggregators and sell direct to agency right now so that we can get the full adoption of the RON setup on there. So that was really how it altered what we prioritized on what we were doing. We literally reassessed what we were looking at for goals, and then said that we're going to walk through this slowly. And as our investors catch up, we'll be able to keep taking steps forward so that we don't have to be a market bleeder where we're ahead of things and having issues, but we're still prepared for it. And the minute it's acceptable, we're ready to run.
Got it. I think we've cleared up the question. Quick housekeeping, check on time. I think Tony, keep us honest if there is a hard stop, but let's make sure we hit the other topics. There's a few other slides we have to go through, and I want to make sure we leave the audience with some call to action on how to engage, what's next. But Tony, keep us honest on the time.
We'll do. We've got about 5 minutes.
Okay. So Rebecca, I don't think there's any other slides on the Revolution report. I think we covered that.
Yes.
And in terms of, let me quickly build this out. You know, how you're applying this, Tony, you've covered a lot of it in the talk track that you've had so far. If you want to just kind of summarize two major questions that I want to address from you is, you know, how are you, as you guys are going through this crawl, walk, run, you mentioned your future state, you know, going all e-notes. You know, tell us, you know, how's the setup going on? Have you done, you know, your first closing yet? Give us a sense of how the setup is going. Where do you see the end state be at the end of 2022? And just summarize, you know, from your perspective as to how you're applying it.
Sure, we're setup is going. It's going like any other setup of any other program. Yeah. Nothing is all hunky-dory all the way across, but I can tell you one thing that I've said is I've had nothing but the best experience with every Snapdocs person that we've encountered. One of the differentiators between Snapdocs and some of the other vendors that we were looking at was the size of the teams and who would be set up for helping our integration. And I can really say that the integration team that we've been working with in Snapdocs is keeping us on point, exactly where we need to be. If we misunderstand something or we aren't getting a task correctly, we have weekly meetings that follow through it. Their project plan is absolutely wonderful. So I'm thrilled with how our setup's going. The hiccups that we're having are in getting answers back from our investors of what they will take, what they won't take. Some of that has been like pulling teeth, but haven't had that experience with anything that has to do with Snapdocs. I can't stress the value of the weekly meetings that we have with our project managers, keeping everything on track and consistently checking for our go live date and our rollout date. And we're in the testing phase right now. We aren't on the live setup, but we're pretty confident with what we've provided back to Snapdocs for all our answers that the outcome is going to be exactly what we're expecting.
Super. All right, quick check on time. So I think we're pretty low. So let's make sure we cap it off. We started the discussion with 3 major questions that we wanted to address. And I think through this conversation, We hope that you now have more color as to how we've addressed these 3 questions. How are we streamlining the e-eligibility portion, what that entails, and how Femi and the Revolution team is applying this as they go on their crawl, walk, run journey. If you have further questions, feel free to reach out to us. I think the contact information should be at the end of the slide when we do a follow-up, but we'll make sure that it is. In terms of what's next, one of the things I want to hit on is, and this excites me as well from a data availability standpoint that we're doing for the industry, is our partnership with Mismo and the exchange that we're launching. I believe the launch date is in April. That will augment and help a lot of the informational gap that we talked about in the beginning. One of the things that is holding back lenders from adopting e-eligibility or understanding e-eligibility. So we're excited about that. And as in terms of next steps, please reach out to your TMC member advocate or Snapdocs executive if you have a kind of channel with them. Chat with us in Miami. We're going to be there. And we would love to see you. And if you see our faces, stop by, say hello. We'll grab a beer and we'll go from there. Want to make sure that we address any other last minute questions. So leaving a couple minutes buffer for us to chat if there's anything on point. And Femi and Rebecca, please chime in if you guys want to add a few closing statements here.
Sure, thanks, Akash. I just want to hammer home on e-eligibility and that Mismo tool that Snapdocs is helping to power. And again, at the beginning of this, I said this report hopes to give you a portfolio look, but really key in your daily execution of closings is going to be that loan level decisioning for your closing. And that's really what that's hoping to solve. So I think that will be really great for the industry and really promote adoption.
I'm going to shill for you, Rebecca, on this for the last setup for any lenders that are thinking about walking into the e-notes and the e-mortgage closings and all that stuff. If you're a TMC member, get the assessment first before you scope out what your projects and your expectations are going to be. When you do that, you're going to save yourself a good amount of time, and you're going to have the information available to you so you can help map out your strategy for what you guys actually want to deploy first.
Sounds great. I did drop in the links for the e-eligibility that's in the chat, as well as downloading the ebook that Snapdocs has provided. So please feel free to take advantage of both of those things. The report is complimentary to TMC Connect members, so please take advantage of that. Akash, any closing words before we sign off?
No, big thank you to Rebecca and Femi. Thank you, guys. Enjoyed working with you throughout this process and continue to building on that foundation. Thank you, guys.
See you in Miami.
Thank you.
See ya.
Thank you guys so much. As a reminder, please know that you will get a follow-up email tomorrow. It'll have a video for this session, and all of the contact information for these folks will be in that email. So thank you guys very much for joining us today. Come back anytime to TMC Connect, and we hope to see you again soon. If not then, in Miami.
Thanks, Tony.
Have a great day.
Thank you, Tony.
Appreciate it.
Bye.
Bye.